Hey, good morning, everybody. Andy Demi here from the London Trading Institute. So in today's video, I'm going to be talking about Bitcoin and the recent rally, whether the recent rally is just a dead cat bounce, to lull people back in only to then go lower, or is this now a significant bounce where we start to trend back upwards? So let's get to it. Now, just before we do, as always, make sure you hit the subscribe button if you're new to us. Head over to the Crypto and FX Traders Club on Facebook to join our community. And please hit the like button if you're enjoying the daily content that we're producing. So with that being said, guys, I'm going to head over to the Bitcoin chart and we're going to get started on this analysis. So one thing that I want to say is we have had a significant change and something I want to kind of highlight to you. Now, what I'm going to do is I'm just going to show you this chart right here, which is the 4-hour time frame on Bitcoin. If you have a look at this green line, which represents the 200 EMA, you can kind of see that this market has been really respecting this 200 EMA really, really well. If you take a look back over here, you can see that, in fact, let me just make this a bit easier for you guys to see. Just hide that. So here's our green EMA here, the 200. You can see here, back in October 2021, as soon as we went above that, the market had a really, really strong rally up. And then the market went below that 200 EMA, and the market then, that was about November 2021, and the price was about 60 odd thousand. And then look what happened then. The market went down, but not only did it go down, it also was respecting this as resistance. You can see the market came back up, right here. It hit this point here as resistance, then went lower, right? And you can also see right here, it did the same thing, hit this market and then went lower. So you can see that this is actually playing a really important part in the Bitcoin analysis. And if we just kind of fast forward this to where we are right now and what's happened since, we've just gone above the 200 EMA, okay? We've just gone above the 200 EMA, which basically is indicating that we could again start to rally, okay? There's definitely that possibility. Now, there's a couple of things that I need to point out here. Timing is everything. And so it doesn't necessarily mean you've got to jump in and buy now, okay? In fact, I've actually got a short signal in the short term, okay? And on my trading account, I've actually taken a short position. Now, this is really a very short-term trade idea, okay? I'm already in good profits and I'm looking to basically, I'll show you. I'll show you where I'm thinking we could take it down or we could buy once this happens. So let me just show you the daily chart, because I've also done some really good work on the daily chart, and then I'll come back to the short-term idea. Now, I'm just going to move this one out of the way so you guys can see the path, and I'm going to also just hide this Fibonacci because I want you to focus on these dynamic resistance points basically created by using moving average envelopes. And you can see here that this blue line is quite a significant line, okay, this blue line, because if you go back to the previous points over here where the blue line was acting as really good resistance, and then what happened here was we finally broke the blue line and we ran up to this purple line. And you can kind of see it's done that a few times here. Then it went back to the blue line resistance. So we had a bit of resistance around here and here. And then right here, it broke it. And then again, it ran all the way up to this purple line. And then finally, this is where we are right now. So I'm thinking, okay, well, it's done it again. It's just broken this blue line. Is it going to do the same thing and run up to this purple line here? Okay, and that will be bringing us up to some quite significant levels up here around that 45, 46,000 area. You can see it's a really clean area, right, matching up with that level. So that's where the potential is for this market to go and rally up to before we potentially get some sellers, you know, some stronger sellers coming back into the market. Okay, now I need to show you both pictures, because yes, there are some signs that the bulls are stepping back in. However, I also want to say this, that if the market actually, whatever it does from here, if it actually goes back below the blue line and closes below it, and equally, you know, you can kind of get that signal from the 4-hour 200 EMA. If we go back below here and close below this 200 EMA, this would be like the equivalent of a fake breakout, essentially. And then I'd be very, you know, I'd be bearish and I'd be looking for a lower low. Okay, so that's your signal. You can put an alert in to let you know in case we do close below. And ideally, I'd want it to close not just below the 200, I'd want it to close really below this line and then eventually this line. And that would kind of signal for me, if we kind of got into this box here, I would be selling that, absolutely selling that, but selling it and holding for a swing trade to break the lows down there. Okay, so we have to be reactive. We can't just be like, hey, it's going up, or hey, it's going down. We need to act on the signals that we're getting. And if we bring back our daily chart, if that scenario happens and we do get that sell signal, then I think, you know, we could definitely go and target this lower red line down here. And if we actually put in our Fibonacci in, you will see that potentially that could take us down to around that 31,000 area. Okay, and you know, look how well that matches up with this red line. Okay, and it might even be perfect by that point. The red line will be down there, so we could even get that push up, and then something like that, take out some stops, even maybe even go lower, and then maybe then rebound. Okay, so that's definitely a possibility as well. So we can't have our blinkers on. We can't just be like, okay, yeah, let's all jump in again, you know, and then, you know, it's the wrong way to do it. Okay, if you're going to be buying value, look for these kind of spots here and here. That's where you dollar cost average in. Okay, not when the market's going up. Okay, so these are great trading opportunities. Now, let me just show you guys, if I can find that chart, I want to show you why I'm looking at the short. I may not, where is it? I've got too many screens, I think, people tell me. Here we go. So I'll bring in the hourly chart. So here's the thing that I like about this. This is the hourly chart. This is basically one of my favorite trading setups, and it's high probability, but also very low risk. Okay, so if I'm wrong, and it's absolutely fine. But this here, for those that kind of understand, you know, who've done our education and have done our Fibonacci analysis, you will know that this here is a fade setup. So the market has basically gone up super fast. It's reached this brown line. And so this here is a very, you know, you're either going to be wrong or right very quickly. So I'm short from here, pretty much the high on this brown line. And, you know, I'm not going to give this too much room. I want this to be a very low risk trade. So if I'm going to get stopped out, it's going to be just above that. But here's the thing. I don't need too many of these to work out, because my target is all the way back down here. That's just the strategy. Okay, those are the rules. I just follow the rules. So if that happens, you know, I'm going to get about a 5-to-1 out of that trade. Okay, a 5-to-1. But here's the great thing about this. What I love about this is that you know, even if I didn't catch it all the way down, maybe I could take some partial profits, you know, depending on how I see things, okay, and I'll monitor it. But what I like about this is that this then becomes a potential buy zone, okay? And what level is that? Well, it's about 39,000. About 39,000. And look at what a great level this is here as well, okay? Old resistance. We've got lots of points here. 1, 2, even that can count, and this block here. So if this market was to go all the way down, well, you know what? And there's probably some kind of some support line there as well if you do it properly. This then here, this block here becomes a buy zone. So we could trade it on the way down and then buy it for the potential then move back towards that 45, 46K that we described, that purple line that we described. So this is, you know, this is what you can potentially do. You can potentially trade short, make money, and then look to take them long. But you've got to be reactive, okay? You can't just sit and think, oh my word, I'm just going to buy it and I'm just going to hold it. You know, you can if that's part of the strategy, but don't buy it at a high point if you're dollar cost averaging in. Let the market come down. So when it's going to these low points, that's when you buy it. So if it does another low point, get ready for it. Okay, so be ready. You know, you don't want to just kind of let the market do it and then you suddenly get scared. Because if this scenario plays out and this market finds its way down here, okay, and your job is then to buy some, right? And then you're like, oh my God, no, I'm scared it's going to go to 20 and I'm going to lose all my money. And maybe it does go to 20, okay? But you don't have to put a lot in. You just buy a little bit as it goes down. And maybe that's the bottom. Maybe this is the bottom. Maybe we've hit the bottom already. The point is you don't need a crystal ball to make money. You just need to basically look at what's happening, take a good probability decision. And right now, look, I can tell you that there's a good chance we push up. But short term, you know, where's that 39,000? Sorry, guys, I think I've got it's quite a long video, so hopefully you're getting value from this. So where's that 39,000? That 39,000 is there, right? And look at that. That's also this brown line here, which has acted as really nice past resistance that now becomes support. So this really does become a really nice buy zone, in my opinion. I think there's definitely value in buying it around here and just seeing if the market is going to bounce, because we might be able to catch a move from 38, 39, all the way up to this kind of 45K area. That looks really nice to me, and I'm going to definitely be ready for that if that does indeed happen. Okay, because you can remember, it could also just be a low test. We're buying the lows, and then it holds, and then the market goes higher potentially. Okay, so I've given you so much there. Go check this out for yourself. Go put the charts up, and hopefully you're kind of getting enormous value from that. Okay, if you have any questions, guys, type it in the comments. Please like the video and subscribe to the channel if you're new to us. Otherwise, I do wish you a great day. Good trading to you all, and I'll catch you again soon with another video. Take care. Bye-bye.